I think it's the most important yardstick. And again, this is a thought which Pulak has articulated in his book, where he speaks about evolution and where he speaks about evolution which could become a benchmark to understand the future. Return, ROCE, is a benchmark, and to simplify it for our viewers, it is the rate at which the company is generating return. If you look at the evolution, Pulak has said that the reason why species survive millions of years of evolution and they become dominant is because they are not really able to adapt with the change which is happening in the natural surroundings. There are a lot of examples of how a lot of species have become
dinosaur extinct. He's been drawn
exactly,
very
dinosaur,
little.
dodo bird, there are a lot of examples. But the ones who've survived, they have a unique ability when it comes to dealing with nature and the adaptability. Similarly, companies will always go through ups and downs. There are global factors, 9/11, 2008, COVID. But companies which generate superior return, and there's a benchmark of superior return which he has used, if the companies are generating that superior return and if they have a track record where they've survived a COVID storm, where they've surprised, where they have gone through the pain of demonetization, where they've gone through taper tantrum, GFC crisis, those companies can really adapt. So just like a species will only survive as long as they are able to adapt to the change of the natural surroundings, companies which generate superior return equity or return ratios will survive when the cycle goes through ups and downs. When you have a superior return on capital, that means in a good time you are making returns which are higher than the industry or the peer, and in bad time it is really the structure or the nature of the business or the moat you have in the business will ensure that in a downturn the cushion in a sense is there in a downfall. So Priyanka, I mean, these are classic stocks which today are called as some of the best compounding industries. In the history of Indian capital markets, if I look at the last 20 years, Page Industries in a sense has been one of the biggest wealth creator. And the reason why Page Industries has managed to create this kind of an wealth is largely because of its ability to have high return ratios, its ability to have that advantage on supply chain, and its ability to really expand the market share, and at a time when the unorganized economy is becoming organized economy, and we've seen that the per capita income is moving, and innerwear was a category which was dominated by the unorganized market, now is dominated by the organized branded players. So his ability to, let's say, identify Page Industries at a time of crisis, which is then World War just coming out of 2008 crisis, I think gives him this advantage to buy a good business when there is a despair on the world.
Correct.
Once you buy a good business, you pretty much ride the business cycle. The definition of a good business is a company which generates superior returns, where the size of the growth is large, and where there is a natural tailwind which is coming because of the big trends in the economy. So Page in a sense really fits the culture, the template, and the thought what Nalanda actually adopts. And then he believes in, once you see an opportunity, Pulak has followed a simple mantra that buy as much as you can, which is that you take large bets, disproportionate bets, buy them during the period of bad time, and then really ride it for multiple years. Like we said at the beginning, he believes in owning stocks for
permanently.
Not days, not weeks, but for years. So this graphic will just come up on your screen, which is just think about it. Havells bought in 2007, Page Industries bought in 2008, Mindtree bought in 2009, Supreme Industries bought in 2010, DB Corp bought in July 2012, holding on to it for over 12 years now. And his portfolio has not changed. I mean, at this point in time, I would also urge our viewers, and the producer will fire his portfolio with this lovely graph which talks about his average holding period. Yeah, so the line which he uses, and I think our viewers should take notice of it, we are not lazy, but we are
very lazy.
Yeah, and that is the trick of investing. That investing is not about activity. Newton का third law है ना Priyanka?
Yes.
Newton के third law में है, if you are, for every action there is an opposite reaction. The more you trade, the more you churn, the more impact it will have in your portfolio. But once you buy and hold a good business, if you bought it at a good price, when there's distress on the street, and then you let the power of business and power of compounding do magic for you. It's very simple. All it applies is a thought process. It requires understanding of what you know and your ability to say, okay, I may miss 100 multi-baggers, but I will identify 2 multi-baggers.
Sure.
And those 2 multi-baggers are good enough to take care of what my current, need is, and where I see the power of compounding will work for me. You know, one of the most underappreciated facts that I think Pulak and all investors they adopt, and I think this in a sense is the ultimate gospel, is the power of compounding.
Okay.
We've discussed this in the past, but I promise to bring this point out on every show. If you multiply your capital, or if a stock appreciates for 20% for 10 years, it's 10x. But if it multiplies for 20 years, it is in 100x. All you need to figure out that which business can multiply for 20% for 20 years and what are the characteristics which are required.
Right.
So evolution has started, there are certain basic characteristics which are required for a species to survive. Similarly, market history has taught us that what are the characteristics which are required for a good company to survive. Whether it is based on return on equity, whether it is built on some other factors which we will discuss.
Sure.
And as long as those filters are put into place, Pulak is happy to buy them when there is panic in the market, and then happy to ride them. It's very simple. We are putting a template here. But trust me, that is the magic of investing.
Yes.
It looks complicated. It's very simple.